FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 9/26/19. Well, a lot of action in the markets. The repo market continues to suffer, to require massive Fed injections. What is at the bottom of that? What's the cause? What's your opinion? You know, we've talked about it a lot here. You can email us at kl@kerrylutz.com with your opinion why we're suffering the repo crisis. Well, somebody who has a thought on it, our good friend Al Caicedo. Al, it's great to have you back on. So the central bank has injected a total of $203 billion into the markets this week, $75 billion on both Wednesday and Thursday. Presumably they got paid back the $75 billion the next day or two, and $53 billion just a couple of days ago. What is ailing the market? I thought this is the best economy that we've ever had.
Hey, you know what? Sometimes you get these little perfect storms that happen, and but you're right. Actually, for the first time in more than a decade, the U.S. central bank has stepped in and in an effort to keep interest rates, on short-term lending from popping above its target range. So, we kind of had a couple of things happen. There were major cash withdrawals. A lot of corporations had their taxes came due. And at the same time, there was a surge of U.S. Treasury debt that came into the market to finance the deficit spending by the federal government. So when that happens, the Fed had to step in, give some liquidity to the markets to allow the banks to continue conducting business.
I know that's what they're saying happened. It just seems to me, Al, that there's a big bank out there. Look, the repo market is the most staid market around. It is stodgy to the nth degree. Nobody even thinks about it. And it's been going on since 1917 with a few interruptions here and there, like 9/11, like 2008. But couldn't this mean that there's a large bank out there that's in trouble, that either has had its collateral seized or defaulted on delivery of the collateral when the loan was due, and therefore undermined faith in the market? Because for it to go up to 10% is really extreme. Even yesterday, or rather Tuesday, it went up to 4 or 5%, and that is from a rate of around 2.25%. It just seems like this market's not functioning properly.
Yeah, I tend to agree with you there. These are always, it's like symptoms of greater symptoms. I gotta put it that way.
Yeah.
And when you start seeing this, this kind of awakens some painful memories of 2008, because we kind of saw some of the same things happening in 2008. And the Fed comes in there and Powell says, everything is okay. Well, at the same time, back in 2008, Bernanke was on TV saying the same thing. Everything is okay, but we started seeing the infusion of money. So I do think that there's issues there. The only thing is to figure out who exactly is ailing. That's a tough one.
Yeah, I mean, it's really difficult to know, and it's not the kind of thing they're going to tell you. We might find this out years later down the road. Just like what happened in the repo market. It's a $2.2 trillion daily market. That's a huge market, and it's a meaningful market. And I guess they're not going to tell us, but maybe down the road we'll find out.
Yeah, I doubt they're going to say anything about it. And, just like they did in 2008, where they knew a lot.
Yeah.
And we just got smacked in the face with it one day. There's just a lot of eerie similarities between 2007 and what's going on today.
Yeah, certainly feels that way. And whereas I don't think the banks are undercapitalized like they were in 2007, for sure. And these loans, they're not making straight out liar loans, right? Mortgages, to unworthy borrowers, but instead they're making car loans to unworthy borrowers and student loans. So the more things change, the more they stay the same, right?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming. Led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Yeah, they just kind of moved it to another segment of the population. And you're right, car loans is good. That's going to be a huge problem that we have coming down the road. And of course, right now, the student debt ratio thing is just totally out of control. But that is becoming something that somehow, some way has to be addressed. And the way it looks like it is going to be another massive bailout for taxpayers again.
Yeah. Well, we always manage to we always manage to pay for everything, don't we?
Absolutely. And, they always say that the government's going to pay this, the government pays that. It always just irritates me because we have to stop saying the government pays that. We got to start saying we're paying this.
Mm-hmm. Yes. Yeah. Isn't it, it's the taxpayer. He always takes it on the chin. We always take it on the chin. You and I are both presumably taxpayers, right? And,
correct. Absolutely.
We just get screwed on this thing. And you can just smell a bailout in the offing here. Like I say, I don't think it's going to be the main Wall Street banks. We're going to be bailing out foreign banks because they're probably the cause of all this, right? I mean, like I don't see Citibank ready to collapse tomorrow. And it's not to say it's in great shape or anything else, just to say that it's not in dire straits. They've got $1.5 trillion in excess reserves on deposit with the Federal Reserve. So this is probably not happening here, right?
No, I don't think so. I think our banks are compared to where they were. Like if somebody wants to make a comparison to 2007, the health is completely different. I think they're a much more solid footing right now. They're probably more worried about the short-term and long-term rates inverting and all that kind of stuff than they are about anything else.
Yeah, exactly. But that's pretty strange. I mean, as a financial person, you never even look at the repo market because it's just there in the background, but it's been kind of a haven for shadow banking as well, right? I mean, what happened during the 2007, 8, 9 meltdown was that they took all these mortgage-backed securities and dumped them on the repo market, borrowed money, and then the next day they were worthless. You watch that movie Margin Call, which is all about fictionalization.
Incredible documentary.
Yeah, it's what supposedly Goldman Sachs did. And they said to all the people in the room, they locked them in the room. They said, all your friends are going to hate your guts. They're never going to want to see you again, but we're going to give you $10 million each to compensate you for your problems. And it was all because this one guy who was an aerospace engineer who went to Wall Street, what a waste of his talents. He figured out one day, he said, wait a second, all these bonds, mortgage-backed securities are worthless. What do we do? And I mean, you can't make this stuff up.
Oh, yeah, it is. And there's just a lot of underlying stuff that the regular public, the citizens don't know about with all this underlying issues that really actually move things and have more power than us just looking at the market and waiting for the next tweet or something like that. Mm-hmm. There's just so much more going underneath the system that really moves us and really makes some tough decisions that have to be made in order to maintain the semblance of a good economy.
Yeah, you're 100% on the money there. Could not agree with you more. But something's got to give here at some point. So Joe Sixpack or or let's say Sam Chardonnay, probably more your client. What are you telling Sam to do now?
Well, right now, it really, the whole focus is really where are you in the time, in your timeline here. You're within 5 years of retirement, or 5 years past retirement, or in retirement. It's really time to really put the bootstraps on and really start having a clear plan as to how are you going to exit your risk environment, and really managing risk as opposed to taking an aggressive stand on growth. So it's really about protecting the asset and making sure that the asset, as you're getting close to that retirement state, that it's there. Because with all this craziness that's going on, with all the volatility that's going on, with as we speak, we have and possible impeachment investigations and everything else like that. We still have wars, trade wars going on, and everything else like that. There's a lot of headwind here, Carrie, that I think people need to really kind of insulate themselves from the next possible recession, so that we don't get, hopefully we learned a lot from 2007, not to be blind, and to start listening and really taking a look at managing risk.
Mm-hmm. Yep. I couldn't agree with you more. It's a very dangerous environment out there, and you need to be ready for anything. And that means, I guess, keeping some money in, keeping some cash in actual cash, right?
Oh yeah. You're starting to see a lot of the big investors are really piling up on cash. As recessions get closer, cash is king, and and you also want to be positioned for opportunities too. So, those are the things that people need to start to sit down either with themselves or with their advisors and really start getting a plan together that says, hey, what's our contingency, so that we don't have to go through the pain of 2008 and then go through the next 6-7 years of trying to recover at a time when we are going to be retired and need money.
Yeah. So an ounce of prevention is worth a pound of cure, in other words, right?
Absolutely. It's time to be really proactive. I mean, there's no more excuses. I mean, we've been through 2003, we've been now 2008, and and we've spoken about this before, Gary. It's not about when, if it's going to happen. It's just about a matter of when.
Yeah, it's just a matter of when, and that's the interesting thing, which nobody has the answer to that, of course, because if we always knew when, we could all get filthy rich without any risk, and it's all about risk. So, when you're looking at the market here, what do you do? Like, what other safety channels are there? Do you buy insurance policies, annuities, even with the huge fees, low load insurance? How do you protect yourself?
Well, really, it's to have a good strategy on income planning. And income planning means a lot of things, from cash to any of the income producing assets that are out there. And having a really good plan for your distribution part of your portfolio. So there's many instruments that could be used out there. It's just a matter of how do they fit in what you're trying to do, the type of liquidity you need, the cost, and everything else like that. So all that requires a good analysis for individuals, as opposed to giving a blanket response to that. It really has to be about how are you creating your income plan and how are you protecting the asset that's creating that income, and making sure that when you're using the income tools that are available to you, that they're actually in line with how you perceive that you want to make sure that you have how you perceive your lifestyle and the generation of income that needs to maintain where you want to be going.
Right. So it really requires a careful evaluation of where you are now in life and where you plan to be, where your retirement, whether it's lurking or, but Al, so many people nowadays really will never retire. And that's not just because the savings aren't there, the financial situation has eroded. It's also because we're different now. We know that stopping work, just cold turkey, can be the death knell of somebody.
Oh, absolutely. We have, more and more people are delaying, more and more people are, and not just for needs. You're right. We're starting to see just, people just want to stay viable. The longer you keep that brain going, the longer I think that you stick around.
Yeah.
And there's so much value that in experience right now. And, there are people that aren't going to do that. But at the end of the day, though, you still have to make the same type of contingency plans. You still have to protect the asset. You still have to have answers as to how you're going to handle the next recession. And because eventually, when recessions come, jobs dry up, and if you're at the tail end and you're the expensive one, you're usually the first one to go. So you still have to be proactive, even though you might not want to be retired. Sometimes, we've had it here many times where we've had people walk in and they've been forced to retire. So mentally, we might not want to retire, but sometimes life retires us, and we want to be prepared for all that.
Yeah. And that's another part of planning, because you got to plan for the things you don't want to happen or the things you don't expect to happen, right? It's really important that you do that. Well, I know people going to want to find out more about you, Al. They're going to want to connect with you on the web. What's the best place to find you these days?
Always, our web address is summitgp.com, or they can also look us up on Facebook, CCAS Summit Group, or you can always call us, 586-286-5820.
All right. Well, it's always a pleasure. Anybody out there listening, you want to email us, you got questions for Al, which I'm sure you do, how to protect your savings and your wealth, email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page is Financial Survival Network. Check out our website, sign up for a newsletter, financialsurvivalnetwork.com. Al, always a pleasure. We'll talk to you again soon.
All right, Kerry, take care and have a wonderful day.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.